I'm Jessica Minton for IB Times TV, reporting from the floor of the New York Stock Exchange, where stocks advanced ahead of Ben Bernanke's speech today. Speculation has swirled over the last few weeks over whether or not the Fed would announce another round of monetary stimulus, and today the Fed said it would undertake QE3 with $40 billion of mortgage-backed securities purchases a month. Joseph Greco from Meridian Equity Partners will be speaking with us about the latest news and who specifically will benefit from QE3. The FOMC announced Thursday that it would engage in a third round of bond purchases to stimulate the U.S. economy. In a statement at the conclusion of a two-day meeting, the Federal Reserve said it will expand its holdings of long-term securities with open-ended purchases of $40 billion of mortgage debt a month in a third round of quantitative easing as it seeks to boost growth and reduce unemployment. Financial markets rallied hard on the news, with the benchmark S&P 500 rising to its highest intraday level since January 2008 and the Nasdaq up 1%. Most economists predicted that the Fed would announce a third round of bond purchases today. What effect will QE3 have on the U.S. economy now, and will it work?
In reverse order, I do believe it will work, and they did ultimately announce just shy of the $50 billion a day purchasing of mortgage-backed securities. They said $40 billion, which I think is actually still, very helpful to the financial side of the economic recovery, not necessarily at all implicating the unemployment side. While they didn't put a timeline on how long they would go, they did say for an extended period of time, and even after they witnessed the economy is well on its way back to recovering. So I tend to think the focus really needs to shift back towards unemployment, even though the securities market, the stock market, it all seems very robust and very well supported by this third round of quantitative easing.
After announcing that the Fed would undertake QE3 measures, the FOMC said it would likely hold interest rates at the current rate until at least mid-2015, even though it had previously set a timeline of late 2014. Although stocks advanced, bond prices dropped as some investors worried that the aggressive easing of monetary policy might fuel inflation. In its statement, the Fed said that mortgage-backed security purchases will start Friday. In the Fed's first two rounds of quantitative easing, dubbed QE1 and QE2, the central bank bought bonds closer to a pace around $100 billion per month, whereas QE3 will have the Fed purchasing $40 billion a month. The Fed is trying to pump liquidity into the markets, but there's a confidence factor where people don't want to spend and invest when they're unsure about what's going on. Do you think that QE3 will help anyone other than traders?
For sure. The long-term holders, obviously, we have, the behemoth pensions that are out there, the civil or the municipal employees, whether it's on the local level, the state level, or the federal level. All of those people rely heavily on their pensions and rely heavily on investments that they build over a longer period of time. And what we saw in the last few years, where people had to make decisions that they didn't want to later in their life, later in their career, because unfortunately not only were they being asked to leave early, but they were being asked to leave early with a significantly lower pension than they had just a few years before. And now what you have is, the new band of employee that's building, the younger generations, which will actually have to work a little bit longer, and hopefully over time this will really build a very strong base so that their investments and their longer term investments will retain their value and grow, and be there for them down the road.
Weak employment data put pressure on the Fed to take action today, and the FOMC said it would likely hold the federal funds rate at near zero until at least mid-2015. I'm Jessica Minton for IB Times TV, reporting from the New York Stock Exchange.